Alright, what's up, awesome people? Welcome back to Royal Blu FX. In today's video, we're going to talk about early entries versus late entries in the market, so stay tuned. For those that subscribe, thank you so much for believing in our content and loving our channel. And for those that haven't subscribed, please subscribe right now, because at the end of the day, you're just getting free content, right? So just go and do it. Just go and do it right now, okay? Okay, bye. Alright, and one last thing, okay? I don't know where all of you have been, but our community is banging right now. If you're struggling making money in Forex or don't have a good strategy and you're inconsistent in trading and you're not making money, go ahead and please refer to our link in the description below at RoyalBluFX.com to sign up right now for us to start teaching you how to trade. And until then, let's begin.
Nothing can stop me. I'm all the way up. All the way up.
All right, so early entries versus late entries. What are they exactly? So what I define as early entries in the market is essentially just your substructure, all right? And your late entries are your major structure in the market. Now, I'm going to kind of break this down a little bit so you guys can see what I'm talking about exactly, because it's very important that you know what this is, only because in order to identify your early entries and late entries, they really depend on your substructure and minor structure and your major structure in the market, okay? So let's just say we have a trend going to the upside like this, all right, pushing bullish, and all of a sudden prices are shifting like this, something like that, all right? All right, so in this diagram, you can see that there's different types of structure occurring in the market, right? You can see that prices are bullish. You can see that this is major structure pushing bullish, and all of a sudden you have the shift in here, right over here, that's considered to be substructure, right? Now, I'm only drawing this diagram so you can see this clearly in the markets, right? Of course, inside of our major structure, there's always a substructure and minor structure creating. So in this case, minor structure is going up, right? Substructure is pushing down like this. Minor structure is going up, right? And then substructure is going down. Minor structure is going up. Substructure going down. Minor structure going up, and substructure going down, right? So in this case, okay, you can see in this area where price shifted is considered our substructure right here. And so what I consider to have early entries in the market is when the market shows us where price has shifted in the substructure, in our substructure, right? So if we're targeting an area of supply like this, okay, you can see that, and this will be our major supply zone, right? Price taps as our major supply zone. You see that the substructure and minor structure are changing, right? Essentially, what we consider this in the market, it's called the chalk, like this, called the chalk. So let's do that, okay? And so in the markets, you can always take advantage of early entries, right? But I'll also tell you why early entries can be considered as bad also, all right? They can be only considered bad only because if you don't know that this is your major supply zone, then essentially this may be something where price is just tapping this this area of supply, right? But it's not your major supply zone. Prices then retrace and then continue, extend like this, right? And then push upwards, and it can continue pushing to the upside like this, and you thought this was an area where price is reversing, right, targeting your extreme low, wherever that extreme low is, all the way down to the downside, right? So this can be confusing sometimes, because if you don't know that this is a substructure or an early entry, you might get a little stuck, right? You might get a little disappointed if you took a sell here, right, knowing that you're thinking that prices should continue bearish, passing, this low, right, and targeting something extremely low at this, at the very bottom, right? So, but I want you to be aware of the two, the substructure and the major structure, early entries and late entries, okay? So the early entry here, okay, you can see that chalk happening in the early entry based off the substructure, right? When prices extend like this, now you're in the market, right? You entered at this very high right over here, right? Because you see the chalk, all right? And prices extend, right? Now what the late entry looks like is, let me show you. You guys might be a little surprised on this, okay? Here's your late entry. Let's go over here. You can see the chalk, there you go. Okay, this is what's considered the late entry. And the reason why this is called the late entry is because prices have made a chalk on the higher time frame. Okay, and you didn't necessarily catch the market at this high here, right? But you're catching it at this high. but it's just a little bit lower than the previous high over here, right? So essentially, it's just chalks, right? It's just chalks, but essentially you're targeting the early entry first, and then you can also target that late entry second, right? If you missed out the early entry, right, you can always look to get the major structure, that late entry in the market. So neither of them are bad. Neither of them are bad, obviously. What we're looking for in this market is to obviously catch that beautiful chalk, right? You can see here when prices extended and impulsively moved to the downside, we would just wait for price to retrace now to the supply area and wait for prices to then continue in this direction, okay? So if you can try and use this model, right, just understand how early entries and late entries work based off of the substructure and major structure, then you'll be able to better see how the market is performing based off of how the structure is forming in the market. Okay, so whenever I look for trades, I'm always looking to trade the substructure if I know that this major supply zone is my major supply zone based on the higher time frame. All right, so yeah, and so then when I'm looking, if I have missed this entry, then of course I will refer to my major structure here. Now I'll refer to my major structure and then wait for something to happen with my major structure to then look for that shift in the market, right? Wait for price to break, wait for price to retrace, and then wait for price to mitigate and then continue to the downside, right? And that's how I can take advantage of that late entry, right? Now let's go back into talking about why the early entries can be dangerous, all right? The reason why they can be dangerous is because if we weren't confirming, if this isn't really a confirmed supply zone in the market, right, and then you're looking to take a sell here, right, and you're aiming to target this low here, then price may just push impulsively down to the downside like this, right, and then create and break some structure, right, mitigate something here at this low, and then the major structure can push prices up like this, and then you would have already had a sell right here, right over here, something like this, and then you would have looked to target the extreme low. Then you would have asked yourself, well, why did price actually excuse me, there's sirens out. Okay, you would have looked to target this extreme low, but then you would have thought to yourself, okay, well, why is it doing that? Why did price just shoot up this way? Well, it's because we have to know psychologically in our heads, we have to understand that we were able to trade a substructure and minor structure early entry in the market, right? Therefore, we understand that price is most likely going to mitigate if price is giving us that chalk. We have to understand that price is most likely just going to either break some structure or go and mitigate something, because that's what we're looking in the market, right? Whenever price moves impulsively to the downside or upside, it's going to mitigate something, an order block, obviously. And the first thing it's going to do is take out liquidity in the market, right? So there's liquidity in there. Let me just make this a little more cleaner for you guys. Okay, what it's going to do is going to go take out that liquidity in the market, go and mitigate like this, and then the major structure is going to start shifting, pushing to the upside like this. All right. So that's what I wanted to show you guys, the difference between major structure and substructure, the early entries and late entries. But what we're going to do now is go to the real-time, the market right now, and so going to show you guys how it actually looks like in real time, okay? So let's look over here. Oops. Here we go. All right, so what do we see here? All right, if we zoom out, you can just see here we're on the 4 hour. You can see that there's a major move pushing to the upside, major move pushing to the downside, right? Major move pushing up, major move pushing down, right? So you can, in this area here, we can see that we also have substructure. And where is substructure in this area? Well, you can clearly see it here, okay? You can see that the lines here, let me just make this a little more clearer. Right there, from low to high, from low to high. Okay, you can see inside here that there's substructure and minor structure moving. All right, you can see that in this area here at this point in time, that substructure was broken, right? And so now we can include this and say to ourselves, okay, well, if substructure was broken in this area, all right, are we going to be looking for buys here to take this buy and shoot all the way to the moon up here, right, to target this high, right? Not necessarily, only because price hasn't done anything here, right? Price, this high here, I'm sorry, this low here hasn't actually taken this high out just yet. So we can't consider that the price is just going to come down here, right, and mitigate, and then push all the way to the upside like this, right? Because that would be nonsense, right? We need to have, this would only be a good target for substructure highs and substructure lows, right? So if you look in here, we had a chalk below to the downside, like this, and a chalk to the upside, all right? Now we can say to ourselves, okay, well, price actually broke, created substructure. We can look for buys in this area of demand and target this current area of supply, right? And maybe target the current high here, and that's it, no more, right? We're not going to look to target anywhere higher than this, only because we've only broken substructure, right? We've only broken the substructure high, and that's it, right? The minor structure took over substructure, so therefore, why should we target anything above here, or I'm sorry, above this high here, if this low here hasn't broken this high, right? We can't do that, right? That's preposterous. So instead, we would think to ourselves, okay, well, our early entries, if you're looking here, okay, let's zoom out here a bit. There we go. All right, and here, this high, right there, something like this, okay. And then now we have that substructure broken. Now we can tell ourselves, okay, well, let's look at our areas of demand, where the most interested areas of demand are, right? Which would be right here, based off of this area where price flipped, right? This is unmitigated, so we look for this to buy from here, right? Push all the way up here and be finished. That's all we're looking for, right? And then from this high here, something from here, you can see where substructure, okay, in this impulsive leg over here, where price is pushed up, like this, you can see in this impulsive leg, you can see where there's substructure switching, right, before major structure has switched. So let me show you here. Okay, you can see here, if we consider this to be major structure, right here, there's a low, high, low, right, there's a high here, low, and high, okay? You can see major structure pushing up, right? Just this area. And now, let's go identify that substructure. From this low to this high, substructure created. From right here, all right, to this low right over here. All right, and notice how we have a valid, to the left of us, we have a valid supply zone right over here. And the only reason why it's a valid supply zone is because we actually broke the major structure right here. And this would be considered a flip in the market for us, so we would look for a price to mitigate this area. All right, so this is a valid area for the supply zone, right? So now that you see here, we see that substructure was changed. Substructure took over minor structure. We have our chalk there, right? We have this, like this. All right. And now we can say to ourselves from here, okay, well, where's the last high? This was the last high, right? Right there. And now you can look to take a sell here, right, with your risk right above, and look to target this low all the way down here. Okay, we look to target this low down here only because our major structure is telling us that price is still bearish, right? If you see all this huge area where price impulsively move to the downside, nothing has broken this high, therefore we can look to target this low with confidence, okay? So we'll target this low here, right? Now let's look at major structure, okay? So this would have been a substructure entry, substructure minus structure entry, okay? This would be our early entry in the market. Now where's our late entry? Well, our late entry is here. Okay, right there. This would be our late entry there. And only because we have major structure broken in the market, like this. All right, take a look at the differences between the substructure and minor structure. You can see that we have that low there, that high, okay, and we have that low and this high here, okay? Two different things in here, okay? So once this has happened, once this low has been violated, you can see price went back up, right? Price went right back up. You could have actually also, and what's interesting here is you can see here there's an inducement in the market. So this, we wouldn't have had a nice, we would not have had an early entry at this point in time, right? We would have been able to catch this major structure breaking, making this chalk, right? We would have caught this last up candle right here, and then the sell would have gone down, right? Let's look up over here. If we want to take advantage of another trade, how are we going to enter here? Okay, let's look at this. Okay, price is moving to the upside. Price broke. If we're following a major structure, we would look at this right there. Excuse me, this is a little slow. Here we go. Okay. So here's our major structure right here. Something like this. Okay. And now what we're going to do is we're going to patiently wait for prices to retrace back up to this high, right? Only because order flow is pushing down to the downside. We have a high, a low, a high, and a low, right? Now we need prices to come back to this high for prices to extend to the downside like this, okay? So this would be a very valid area, zone for where prices should come to mitigate and then continue to the downside. All right, so that's our major structure, okay? Our late entry. What if we want to take an early entry though, right? Let's look at this example here. You can see right up from this high here, if you took a sell, you can see that we had a early entry, a break above, sorry, a break below. You can see it here as well. Okay, we need the high first broken, obviously, right, in order to confirm this is an early entry, right? So you can see here the high was broken, the low was broken. I'm sorry, this was wrong right here. It's actually right here. This would be early entry. So you can also see here at this point in time that the early entry hasn't happened, right? Prices just impulsively moved to the downside. This would have still been our entry for the earlier entry, right? But you can see that the major structure has shifted here, all right? Broke above, broke below. Now we're waiting for price to come back here to extend to the downside. Also here, price broke above, price broke below, but it didn't tap here. It didn't sell. It didn't break and mitigate here. Right, price left a lot of imbalance in the market, here and here, right, and also here as you can see, and here, right, not right there, but there. Okay, so we know that price needs to come back up and recover this huge imbalance in the market before prices sell off like this. Okay, so let me show you another quick example of early entries versus late entries. Okay, let's go. Okay, here we are. Alrighty, so right over here. Let's zoom out here. Let's zoom out. Okay. We can see that this was our last low here. The high pushed up and went all the way down. So now we can tell ourselves that, you know, this is our area here. This is our extreme high. This is our extreme low. All right. And then now we can zoom in right in here and see to this area here. Okay. This was our last up before the major move pushed down. All right, we wait for price to come back up. Now we have to wait to see what would happen based off the substructure and minor structure, okay? So here you can see major structure has broken a high, major structure has broken a low, right? Where's the best possible area for price to come back and mitigate, right? Well, it'd be right there. Let's go back here. Let me zoom in here quite quickly. Okay. You can see that prices need to come back and mitigate this high here. And so far, we see that this is our last up move before the major move push down. So we would look for prices to come here and sell off. And at this point, you can see prices haven't done that, right? Prices are just creating liquidity right here, waiting for price to come and take all this liquidity, tap this, and push markets to the downside like this. So we know there's a lot of liquidity resting above here, waiting for the markets to push back, tap, and go. So we're going to keep this area of the zone here, right? Let's look at our early entry, okay? If we zoom in here now, price has tapped up our major supply zone. Let's look at where our early entry would be, all right? So we see that we have a low, high, low, high, low, high, substructures moving up, sorry, minor structures moving up. Okay, you can see a chalk there, and a nice chalk. I mean, it's just one chalk, it's not two chalks. But here we go. Okay, there we go. That would have been our early entry. And why does the early entry work right now? Well, it's only because price is mitigating an extreme high, right? And it's mitigating the exact correct supply zone in the market. All right, and that's why the early entries can work in the market. Look over here. I'm going to show you this. So there's a chalk, right? And then if you see this here, this is where an area where price actually stopped. So this would be considered a flip for us. It stopped, pushed up a little bit, and price broke to the downside. So this would be considered our flip. Okay, right here. And then beautifully enough, you can see that this wick here mitigated this flip right there, and then pushed prices to the downside. So we could have taken advantage of the sell from here, from the flip, right? We would try and cover at least the high over here, and then look to target the bottom to the downside like this, right? Now we can do it confidently and look to target this low here, only because our major structure is mitigated something here, and then push prices to the downside. You can target this low actually. Sorry, this is our major low here, right? If you look at here, you can target this extreme low right now, only because prices have mitigated something major, right? So this is where you would look to stop and take profit right there. All right, so that's the difference between late entries and early entries. Okay, if the early entry isn't there and present for you, right? If it mitigated already, something like this, and prices have extended to the downside, try and look and refer to your late entry and see if your late entry will mitigate price right away. And if it doesn't, it's probably because the market isn't mitigating anything right now at this point, and it's going to mitigate mitigate price there later, right? The market always has their own intentions of doing things, right? They know what they're looking for, what they're going after. We all know what they're looking for and going after. Obviously, it's essentially just liquidity in the markets, right? A lot of resting orders, like here, for example, and so that's why we can be patient and wait for price to get here to this area supply in the markets for prices to be taken, because this is how we're going to take advantage of the big moves in the market, right? So who knows what will happen in here, right? We do have a beautiful chalk. We can target this high here, finish here, and if prices stop here and then push up this way, we know what's going to happen up here, because this will be looking like we're going to take the major sell to the downside like this, mitigating this high, only because this high here was not mitigated. All right, our extreme here was not mitigated. So we're looking for price to come and tap this supply zone and then push prices to the downside. You know, it's that's how easy this trading is, right? Understanding your early entries and your late entries. Okay. All right, guys. I hope this video was just helpful to you guys. If you guys really love this video, please throw a thumbs up on this video, and please comment in the section. Please let me know what if you guys are understanding everything I'm saying in this video. I hope I didn't leave anyone confused. And then until then, we'll see you guys later.
Nothing can stop me. I'm all the way up.